Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over everything you need to know on AMC stock, including a very fascinating article from Investor Observer. Is the fear warranted in AMC stock right now? He says something that, well, is notable in my personal opinion. And we're going to share that here in this video because when this happens, AMC stock will explode. Okay, there's no question on that. That is a definitive fact in my personal opinion. Obviously, I'm not a financial advisor. I don't know how markets exactly will move off of this news. But if I were to put my chips all on one bet, it would be AMC stock would explode after this news. But again, I've been wrong before and I could be wrong again. So don't take my advice for it. This is not financial advice. It's not a recommendation. This is just my personal opinion. So let's get into it. Hit the like button and subscribe to the channel. Let me know what you think about this information down below in the comment section. So first up, we'll start with this. This is from Investors Observer. It says AMC stock price forecast. Once beloved meme stock gets oversold. Is the fear warranted? It says AMC Entertainment, which became a hit during the meme stock mania, has become a hated company with a short interest of almost 10%. It has angered many investors, mostly because of their regular dilutions. It raised over $865 million in 2023 to address its substantial challenges and reduce its debt. This trend has led to a sharp increase in the number of outstanding shares. Most recently, the company announced that it would swap its equity for equity for debt in a bid to pay its substantial debt, and the situation is not good. The company holds $4.75 billion in debt and an accumulated deficit of over $7.8 billion. For a company that is incinerating cash to a scale of over $400 million, these are huge numbers. The other concern is that the box office industry seems like it will have a muted performance this year. Some of the highly anticipated movies this summer are the likes of Deadpool, Beetlejuice, and Ghostbusters. While these are acclaimed movies, I doubt they will have a similar impact like last year's Barbie, Oppenheimer, and Taylor Swift's Eras Tour. These releases pushed AMC to have great performance in the quarter. Its total North American box office revenues rose 38% to $2.7 billion, while its adjusted EBITDA jumped to $193 million. The company's total attendance in North America jumped by 34.4%. While these numbers were good, they will be difficult to replicate this year. Looking forward, I believe AMC will likely survive, not thrive in 2024. It will likely continue to dilute its shareholders in a bid to lower its debt burden. By the third quarter, the company had reduced its total debt by $372 million. It has paid off over $764 million since January of 2022. So is AMC Entertainment a good investment? This is the interesting part. AMC is, without a doubt, an incredibly cheap company. Its stock has crashed from over $300 during the meme stock frenzy to less than $5 today. However, this cheapness has been a value trap for most people. Therefore, I'd only start buying AMC if it shows improvements on revenue growth and commits to not raising additional capital. That's the golden goose, baby. You have to get that announcement from Adam Aron. It's not a question, in my opinion, if it's going to happen, but more a question of when is it going to happen. It's going to happen, okay? They don't have a choice. Adam Aron does not have a choice whether he wants to or not. He has to. There's no choice. Sorry, buddy. There's no choice about it. So when does that happen? I don't know. Honestly, I would rather see this happen like the second half of the year, because I think the second half of the year is going to be much stronger than the first half of the year. As you can see from this chart, this is election year seasonality. We typically have sideways markets in Q1. As you can see here, this dark blue line is presidential election years since 1950. And what you tend to see is a flat sideways trading market for about 111 days or so. A little bit over 3 months. Then markets tend to do pretty well, leading into the election towards about 170 days into the year, which would be what, like June or so, July. You tend to sell down until right around the election and then take off towards the end of the year. Now, this lighter blue line is what the markets typically do. So the markets typically have somewhat same kind of seasonals towards October, November. You do tend to see a little bit of a sell-off until markets rally into the end of the year, but you don't get this super sideways or down trading action, right? This is not what tends to happen in a normal year. In a normal year, you actually tend to do pretty well in the first half of the year and then kind of trade sideways mid-year and then make a move lower and then make a move higher. Whereas this presidential years, oh my gosh, you actually tend to trade sideways or down, rally pretty aggressively, come down pretty aggressively, and then make an aggressive move higher. So from my perspective here, I'm really not expecting anything different this time around, but this time around is different, right? This is unprecedented. I don't know of any other time that we have had something like this taking place, where we have an election year, we have zero clarity on the economy, we have no idea if we're entering into a recession or not. We don't know what inflation is going to do. We don't know how company earnings are ultimately going to be. There's a lot of unknowns that we just don't have answers to right now. So that makes this time, this moment that we're in, very unprecedented in those terms. Maybe it just makes everything a lot more volatile. Maybe, Q1 could be a lot worse than typical. Maybe the mid part of the year could be a lot better than what's typical. Maybe you get no sell-off around the election or a slight sell-off, and then you see a rocket towards the end of the year. I don't know. But I do think the second half of the year will be more exciting either way, but it does depend on the course of dilution. If we do get a lot of dilution, well, stocks are obviously not going to perform that well. Right? Or AMC specifically is not going to perform that well. And why I'm so confident that we will get this announcement is, mathematically speaking, you have to see this announcement. There's no question, unless we get some kind of crazy earnings or crazy catalyst or something along those lines that pushes AMC stock higher. This is not a question, right? You have to get AMC stock higher or you cannot pay off your debt. That's a simple fact of the matter. You can't issue enough shares at higher $4 to pay off your debt, right? It just doesn't work. So by 2026, we're going to be in a little bit of a pickle. Now, where this situation gets a lot more potentially bullish is, let's say the Fed starts to cut rates a lot by the second part of this year. Maybe AMC is then able to go to the debt markets and maybe refinance some of their debt. And then AMC can raise capital, and let's say AMC stock is $15, $20, $30+ per share. Then you probably start to get a very, very bullish AMC. Okay, now that's a possible path forward. Another possible path forward would be pretty bullish market, things kind of the same in that regard, but AMC just keeps diluting shareholders. In that case, I don't expect AMC to do much, right? $4, $5, $3, $2, in that range is where AMC stock would be, even if the markets get a lot more bullish from here. So those are only my expectations. Let me know what you guys think down below in the comments section. Now, let's go ahead and get into some of the data here with Ortex and AMC. You do have 9.26% short interest of free float. That has actually been rising a little bit recently. You were at 7.95%. Now you're at 9.26%. It's still very low, but I think these numbers are false anyways, and it wouldn't surprise me if we continue to see AMC short interest increase because of that SEC new rule change that is going into effect. That should already be in effect, but we don't quite have the aggregated data yet to show who is short in AMC, how long they've been short in AMC, and what kind of collateral is being used, all kinds of different details that normally we would never get, right? That's the new rule that should be going into effect. We should get that data here pretty soon. So I think more of the short positions might start to be captured and actually reported to us in this legal short interest number. We do have $106 million worth of short positions currently in AMC stock. Days to cover 1.18, 23.2 million shares that are currently sold short. Shares out on loan 17.97 million. Cost to borrow 1.08%, utilization of 29.19%, and a short score of 54.12 out of 100. We don't have any cost to borrow numbers. Last we knew, cost to borrow fees about 1.26%. So nothing exciting over there either. If we take a look at the option activity for the past week, you have had 36 orders totaling $1.92 million with a positive order value of 17%. And taking a look at the open interest setup for this upcoming week, 63.9% to the call side, 36.1% to the put side. So some activity, definitely almost a 2-to-1 ratio, 2 times as many calls compared to puts. So that looks relatively good, but it could be a potentially volatile week. And we'll talk about my price prediction and what I expect to happen this week and the data and all of that here in just a moment. But could definitely set up for an interesting one. Now, as far as stock twits, the sentiment currently is bullish, which is pretty surprising. You're at 62, and your message volume is at 18, which is extremely low. It's been that way for 2 days. Message volume being low, not great. Sentiment can be bullish or bearish just depending on what's going on, who's commenting on, AMC making posts. You really just want to see AMC have high message volume and a bullish or extremely bullish reading here on the overall sentiment gauge. That would be good. Now, participation ratio. This measures the number of unique accounts posting on a stream relative to the number of total messages on that stream. You can see it's at 41. It's considered low, but it's pretty close to being in a normal range. So I think that's another interesting one right there as well. We did get the latest AI investor sentiment survey that did come out just a few days ago. This is the American Association of Investors, or of Individual Investors. They've been doing the survey for a long time. The bulls staying right at the same 48.6%. Neutral investors dropping a little bit from 27.9% to 27.2%. Bearish investors increasing a little bit from 23.5% to 24.2%. Interesting to see how this does evolve. Now, as we also shared in one of the last videos, the 50-cent trader is back, and they have bought 250,000 call contracts on the VIX with a strike price of 17 that expire on February 14th. Now, this trade covers earnings. This covers the Fed on January 31st. This covers the CPI report, which will come out on February 13th. We do have retail sales this upcoming week. We have 6 Fed speakers and other catalysts as well in this next couple of weeks here. And this trader spent $17 million on this bet. And as Interactive Broker says, it's hard to know if this is an outright bearish bet on the market or an aggressive portfolio hedge after a big move. He says either way, it expresses concerns that we could see a little bit of a pullback during or after earnings season. Now, this is notable again because the VIX is trading at basically the lowest points you've seen in a long time, right? A pretty dang long time. So to get a spike in the VIX here is not exactly the consensus forecast. So that just might make that bet a little bit more appealing or attractive. We'll see the S&P 500 on Friday. Was up a little bit in regular trading, falling almost 0.25% in after hours. Same thing with IWM and the triple Qs as well. So we'll see what happens. Stocks currently trading pretty much at all-time highs. SPY hit a new all-time high on Friday, and this is obviously accounting for dividends. SPX, not accounting for dividends, did not hit a new high on Friday, but pretty close nonetheless. I think we might be set up for a little bit of disappointment here over the next couple of weeks, but we'll talk about that in the next video. Let me know what you think about all of this information down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.